actual bad news out there for stocks, including oil at more than $100 a barrel. Is it safe to keep on investing in the market, the stock market right now? Here's Keenan Hawk from Samex Capital. Looks like you can't...
Hey, good morning, Stuart.
You can't kill this stock market as long as Ben Bernanke keeps on printing and the politicians do not cut spending that much. You agree with that?
Yeah, we do, and we've said it for a while that we are in a structural bull market. It's been going on for 2 years. We think that we have quite a bit of life left to it. However, sir, you may recall last time I came on, it was February 17th. You asked me point blank, should our viewers put all their money into the stock market right now? And I said, whoa, at most maybe 25%, but be careful because the market is very vulnerable to a correction right now. That was the day before the high. We haven't seen a higher level since then, so we have been correcting just like I called it. And it looks like we're still in a somewhat of a period of a correction right now. So
okay, so a little bit dicey. You wouldn't be buying stocks right now.
No, again, I would say the same thing. If you have no money in stocks, take 25% of your money, put it into 3 areas that should lead to the final day of this bull market, which I think doesn't come for some time: basic materials, energy, and big cap technology type stocks.
Okay,
I want to be a little bit careful. The market still is vulnerable to a little bit of a correction in here.
I want to ask you about government spending. I think this is a big picture theme here. The politicians seem loath to seriously cut government spending, and the market seems to like that. The market seems to want us to keep on spending.
Well, the market's been addicted, and it's not just the market. The economy in general has been addicted to large government spending programs, and not only on the federal level, Stuart, but look at the state, the community level, the schools that have been built around the country. I mean, it's been an absolute binge, and a large portion of the economy, and it's very unfortunate, is addicted to that kind of spending. We have to readjust. So I think that you might be a little bit over-exaggerating that the politicians are not willing to cut spending. I think you're seeing it in small levels, and I think it's a trend that will develop and build over the next 20 years.
Keenan, that's it. We've just reported a deficit of $223 billion for the month of February, and we can't even, the Democrats can't even cut more than $4.7 billion for a year. Come on.
I know, and I agree that we are seeing it, though, on the local level, the state level. Look at the battles that are going on. This is all about the spending. And I do think, though, it's going to take 20 years or even longer, Stuart, to really wean the public away from that spending. I think we're seeing the very, very early stages of what I believe is a positive trend, but again, very, very early, and it's going to go on for decades.
20 years? You think that investors and lenders are going to give us 20 more years of deficit spending? Yeah?
God, I hope so, Stuart, because I have 3 little boys. That a country that runs out of time is not a country I really want to live in. Do you?
I think we're almost out of time, Frank. I don't think we got 20 years. It might be 20 months, but that's all you got. That's just an opinion. Okay? But let's sum it up. You say, watch out, this stock market is still in a correction mode, 25% of your money in stocks, that's it.
Right, put 25% of your money in industrials, large cap tech, energy, basic materials, and keep your eye because the market is still vulnerable to a short-term correction, but overall and bigger picture, we think this bull market is still very much alive, and we could see much higher prices over the next 12 to 18 months.
Keenan Hawk, March 9th, 2011, on tape saying what he just said. Keenan, thanks a lot. Appreciate it.
Bye, Stuart.